Well, thanks, John, for joining us today.
Yeah.
Oh, there we go.
Yeah, no problem. Excited to be here.
Excellent. So it'd be great to learn more about you. I mean, you've started multiple companies. It'd be great to hear how you've ended up running crypto and stablecoins at one of the largest payment groups globally.
Yeah, for sure. So look, I'm an engineer by training, electrical and computer, and wanted to go into robotics and never really made that work and got into software instead. I've actually been around Stripe since the beginning. 2011, I had a startup out in California doing high-speed data transport, and we were in Y Combinator. And Stripe hadn't launched yet, but all of the YC founders got an email one day from, I think it was John Collison. And it was just this kind of little explanation of, boy, the last startup we tried to run, it was really hard to process payments. Seems like a problem we ought to solve for everyone. And they issued all the YC founders Stripe accounts. I think they just renamed from like Dev Payments or something was the old version. And for us, at the time, it was just magical, right? Like historically, back in 2010 or 2011, if you wanted to process payments online, you had to go get a merchant account, you had to go get on the phone with someone, you had to go through sales, you had to negotiate against a bunch of rates you'd never heard of before. It was very non-developer centric, very like non-users focused. And so, over kind of the course of my career, which was kind of running that startup, I was selling it to Facebook, running enterprise there, building the workplace team. Actually lived here in London for about 4 years, building up the product office for Facebook here. Stripe was always sort of there. And it was kind of to the side, and I always thought of it as, great, this will be like a great service provider, for more companies that I build in the future or for work we might do at Facebook. And when I left Facebook, didn't go straight to Stripe, actually started in blockchain. So I was really excited at the time about NFTs, and this was kind of pre-NFT boom in 2016, and kind of mobile and Instagram and the ability for anyone to go and create assets on the chain. Worked through a startup in that space, worked through a SaaS startup, and when I was looking for the next thing to do, I was really surprised to learn that Stripe had sort of a young fledgling crypto organization internally that was looking for a new product leader, and it's just kind of a easy match, easy fit, showed up and ended up being a wonderful team. So there ever since.
Yeah, no, absolutely. And that's your story. I mean, I'm curious how maybe the Stripe vision in terms of why stablecoins, how does that align with the broader vision? And then potentially also looking forward as to, how do you look at it going forward as well?
Right. So it wasn't always stablecoins. Stripe tried to do payments. I think John talked about it at sessions recently back in 2014. Where we tried to accept Bitcoin as a payment method for merchants. And I think the joke internally has always been everyone regrets every Bitcoin they ever spent. It didn't really turn out to be a great payment method. It wasn't particularly performant in terms of speed. It was pretty expensive. It was a volatile asset, sort of like buying something with a stock.
Yeah.
So look, the first foray into it, while like a technological success, like the product did work, it wasn't really a merchant and consumer success, which is ultimately what we care about. So stablecoins, right, are really exciting because in the wake of all of this other messiness that happened in the crypto space, FTX falling over and sort of Stripe stepping a little bit into the payouts world, we finally have this kind of technology movement inside of crypto that's much more native to what Stripe is trying to do, which is enabling core global commerce for merchants and their consumers. And I think stablecoins just make more sense as like a drop-in solution for that and solve more of the on-the-tin problems without introducing so many other problems of their own.
Yeah, no, absolutely. I think obviously you mentioned Stripe sessions and the kind of the exposure and just the interest that it generated. I'm just curious in terms of how are decisions made around stablecoins? Like, how do you think about the roadmap? Like, what's your North Star?
So we try pretty hard internally not to be evangelists, right? We try to be pretty practical. So our North Stars inside of crypto aren't really any different than the rest of Stripe's North Stars, right? Like our goal is to increase the GDP of the internet, and there's 100,000 different ways to do that. And I think crypto is an accelerant on certain axes of those pieces of effort. And I think like the obvious ones that are kind of coming to be true have a lot to do with globalization, access to global merchants, access to global consumers, and global commerce in general, as well as sort of enabling a new type of payment method that crypto natives are excited about. So when we pitch this internally, actually I don't have to do too much of the kind of Steve Jobs style, like let's go explain to everyone why crypto is the future of the world. We get to really talk about the practical implications of crypto against work that's already happening. Stripe has a huge internal money movement business that it has to keep active for its merchants and for itself, right? We have a growing global business of countries that we're trying to enable and light up. We have a payouts business. We have Connect, right, which is sort of the core of what Stripe provides. And if you look at these things through a lens of especially stablecoins, there are all of these like little advantages we get, and they add up to sort of a larger kind of crypto opportunity for the team. So we try to talk about it in terms of Stripe more than we talk about it in terms of just crypto itself and betting that crypto is going to go somewhere. We say crypto is already there. Here's how it can get Stripe faster to where it's already running.
Yeah, no, thank you for that. And obviously Stripe has been at the forefront of many large players entering this space. I mean, curious for you, for different folks in the audience that are potentially thinking about this, what are maybe some of the lessons or challenges, especially from maybe a global, kind of a global landscape and environment that changes, and that the interest in this space also adjusts, and just maintaining that kind of growth mindset. Sometimes I say that the challenge in this space is not being overly exuberant when times are good and not being overly fearful. I'm just curious how, some of the lessons that you've taken away from this.
I think find good partners is pretty high on that list. You know, certainly Zero Hash has been a great partner to us. But just in general, it's tough to go it alone. There's a complicated regulatory environment out there that's changing day to day. There's a changing, ecosystem of coins. There's a changing ecosystem of networks. There's complicated data needs. There's sanctions, compliance. Anyone entering this space, you're really going to end up creating, sort of a little army of partners and friends and people who you have to go at it with. It's sort of the beginning of Zelda, right? Like, it's dangerous to go alone. You have to do that, I think, 10x in crypto, even versus sort of the traditional space. I think in the traditional kind of fiat processing world, if you're entering into payments, you're really looking at these bank partnerships, and you're really looking at your network partnerships with like the credit cards. But in crypto, it's not, right? It's a series of like commercial arrangements that you need to set up, and all of them need to be looking at where the world is today and where it's going to be in a year. And they need to not be betting their entire partnership's business on one future, because when the unexpected happens, which it happens more often than not inside of crypto, they've got to still be there, and they have to persist past things like the equivalent of a central bank falling over. Yeah.
No, absolutely. You mentioned there just different stable coins and different chains, and we discussed this extensively over dinner last night. I'm just curious, how do you think about different chains, different stable coins, especially as you think about a relatively fragmented space right now, especially from a chain perspective, that it changes quite quickly. We support, for example, 10 different chains on stable coins. How do you think about, will many chains still exist, or one will predominate? Do we need more stable coins in this ecosystem? I'm just curious on your broader thoughts of that.
I mean, certainly within Stripe, we prefer regulated chains, regulated coins. It makes our life easier. It makes it easier for us to operate. Stripe likes to see itself as an honest broker, both within crypto and within the fiat space. So companies like Circle are doing a very good job of being regulated. I think in the chain space, what's really interesting is we're seeing differences between different chains in terms of what their core focus is. I think like Base is doing a really good job of like activating kind of the developer ecosystem of unique builders. I think Stellar is doing a really interesting job of how you handle the global off-ramp problem when it comes to building a chain out. Ethereum's not going anywhere, right? I think like there's going to be a plethora of these, and it would be easier, I think, if there was one chain and one coin, right? Like, it'd be easier for everyone. But I don't think that's where we're going, and I think for now, at least, the competition is healthy. And I think while we might see a little bit of a collapse down to like a smaller number of widely adopted chains and widely adopted coins, I think right now, as long as you folks keep up with it, it's really actually nice to see the different kind of focuses across the various chains where we can experiment and sort of provide that. It does produce a bit of a consumer challenge, right? Which is one of the hardest parts of interacting with the blockchain and on-ramping, especially if you're new, is making that decision. And stables almost suffer from this 2x, right? Because you're picking the coin you're familiar with, but now you're also picking the chain. And if it's your first time coming into the blockchain and you're trying to buy USDC, and I give you a list of 7 or 8 chains to on-ramp into, like, that decision's not obvious. And so I'm really hoping that we get more kind of obvious use cases for the individual chain, such that when you're making that decision, we can help you make it, right, at the UX layer. And then the chain ends up with the appropriately attached consumers for whatever goal they have, whether that's transacting or building or otherwise.
Yeah, exactly. And I think that also drives more adoption around, for example, bridging and the ability to make it very, very seamless, to your point, right? If I send you money through Apple Pay or through debit card. It's not different, right? The dollar's a dollar. And the same thing we need to get there from a stablecoin perspective as well, I think.
Right. So driving like gas fees down,
yeah.
right, across that bridging and like interchain interoperability, I think becomes more and more important. I'd love to see the chains working together more on that. I know we have a lot of like third parties that are working on connectivity and sort of liquidity pools, but boy, it'd be great if the chains just worked together on it a little bit and came up with like low cost interoperability.
Yeah, no, precisely. I think maybe turning to the product pieces of Stripe, and Stripe is public around a number of different parts. We've got, for example, payins, which was obviously announced at Stripe Sessions. You've got the payouts product, and then you've got the on-ramp product. Just maybe focusing one by one in terms of the on-ramp product. Can you explain to us a little bit about what is the problem that you're trying to solve for, and what is the use case and implementation of that on-ramp product?
Yeah, we really think of on-ramp as Web3 enablement, right? When on-ramp was originally conceived, the idea was that there's a rapidly growing set of on-chain organizations that are appearing that want to reach out to consumers that historically haven't been on-chain, but they don't want to go through the licensing process and the sort of merchant relationship process of actually getting those individuals who maybe want to purchase an NFT, right? Or participate in a DAO, or load funds into a wallet. Don't want to go through that process of, great, how do I get them from that credit card that they're so used to swiping over to the on-chain environment where I've built my entire business, right? My business is running on these contracts. My business is running on this like on-chain experience. And so on-ramp at the time, I think there was, there were one or two already out there. Stripe really thought that it could win, particularly on the kind of end-to-end acceptance flow process. Our on-ramp, at least in our opinion, has the highest acceptance rates of any on-ramp, where if you come in with a credit card and you type in that number and you push it through, like your odds of actually getting all the way to the end of that process and ending up with crypto in your account are higher with the Stripe on-ramp than anyone else. One of the advantages of being a PSP.
Yeah, and is that because you are effectively in control, you are a merchant of your own infrastructure, or is it just the knowledge that Stripe has acquired over years? Like, can you just unpack that a little bit more?
It's both. I mean, we have really strong relationships with the networks and with the issuing banks. We're considered an honest broker in the space. We also just have a lot of in-house fraud. I think a lot of the on-ramps had to sort of learn fraud the hard way. Stripe's been doing fraud forever. We have a radar product. We do our own identity verification services. So the more you can kind of keep that in-house and the more you can interconnect it, the more efficient you can be. And hopefully the more performant you can be for the customer.
Yeah, absolutely. I think maybe turn into pay-ins, right? The abilities for you to pay for example, I give the example of my hotel room here, or for example, somebody in Argentina paying for Netflix, for example. Right. I'm curious a little bit about there. Obviously, it generated a lot of interest publicly. What are the type of merchants that have expressed interest in this? What was the genesis? And then as you announced it, what has the inbound been like? For whom, why, and obviously how is through you, but it'd be great to unpack those two parts.
Right, so look, every merchant on Stripe wants to have access to a wider consumer base, like full stop, right? And historically, we've thought a lot about this, just Stripe, not crypto, in terms of like local payment methods. What can we enable as we light up more geos? Crypto sort of has this, and stablecoins particularly, have this really unique opportunity, which is we can light up most of the world when it comes to consumer enablement for the vast majority of especially traditional like digital SaaS businesses that are on Stripe. If you're selling a SaaS service and you want to accept consumers, and it's particularly a digital service, right? There's really no reason you should be limited down to consumers in the US and the UK and the EU and sort of places where they have a credit card or a debit card. If there is a small business person in Nigeria who wants to purchase your cloud Excel competitor, right? There's no reason you shouldn't be able to accept payment from them. And it turns out stablecoins is probably the fastest way to do that. So when we look at the merchants, it really is almost a one-to-one mapping of like the largest merchants that are already operating on Stripe, that already have wide consumer bases inside of the current like easy to accept payment method regions. They're the same merchants who are really excited about accepting stablecoins, primarily from a geo expansion standpoint. I think there's an additional side to that, which is crypto natives. So there's already an adopting community of stablecoin users, which is across all of the millions of accounts of active crypto wallets. And I think enabling that is, I won't call it gravy because it's also very large right now, but like enabling those early adopters also has a lot of advantages to it.
No, precisely. I think maybe one way of thinking about this is that Stripe has really solved this simplification at the top layer for startups, but then obviously there's still limitations of the kind of the back end that exists, and stablecoins can effectively make that simple. So when you add simple plus simple, it really creates a huge opportunity. I think maybe then just turn into the third leg that Stripe is public around, for example, payouts, whether it be, for example, a global merchant or an NGO, for example. Can you talk a little bit more about what was the driving force there? What is the use cases that have been deployed today? What are the ones that you think will be the growth vectors as well as we look forward? It'd be fascinating to hear that on the payout side.
Yeah, payouts really started with like global marketplaces was a lot of the original idea.
Yeah.
One of the ones we point to actually is sort of funny. It's called CS Float, right? They do like Counter-Strike skins, but they do a huge business. It's very global, right? It's a video game, so people are playing it all over the world, and they're trading these skins, and it's almost entirely operates in payouts for paying the sellers. I think moving forwards, like you actually listed one of them, I think NGOs and global aid is becoming really interesting.
Yeah.
I think if you look at like what the UN is doing with direct cash vouchers and where they're looking for digital payments and how you might do that distribution, I think that's becoming a really interesting angle for the product. I also think like global remittances is one of the worlds that's becoming bigger and bigger. I can't list the names, unfortunately, like most of those customers are confidential, but there's a lot of like global remittances, a lot of global payroll, like that's really becoming bigger and bigger as sort of the gig economy really takes hold, and as like sort of the COVID really pushed us right into this like globalization of work. And I think stablecoins map to this wonderfully because a lot of these folks are either expats and are living in regions where they still want to receive US dollar equivalent, or they're living in regions where they just would prefer not to deal with the volatile local currency and would much rather operate inside of stablecoins or something backed by a more stable asset.
Yeah, no, precisely. I think that's one of the things I've learned through you guys is just the breadth of different types of merchants, right? You gave the example of the skins, and just the more you learn about merchants, you just realize how much of the world you actually don't see. And I think that's what's really exciting about Stripe is that you're effectively making it so much easier for these global businesses that maybe aren't top of mind, that I wouldn't imagine using, but that a huge part of the population and merchants have these problems that need to be solved.
And now these guys get it out of the box, right? It's global by default. Right? Instead of like global by intention, global by saying like, I want this country, I want that country, I want this other country. It's so much easier to just say, here's one currency type that we can distribute globally to anyone who wants it. And it's one click to access. I think that's really pretty magical if you're building something like a marketplace or a remittance organization or anything otherwise.
Yeah, it takes away the restrictions. It really does create a global infrastructure. And that global connectivity hopefully will continue to grow the GDP of the internet, as you say.
And bank accounts are hard.
Yeah, absolutely. I mean, maybe just turning to, for example, Zero Hash. You mentioned geographical coverage is something that's important for you, and something that we discussed. I mean, maybe it would be helpful to understand. We've been working together for close to 2 years now. It would be great to understand why Zero Hash at the start, and then as you look towards us, and we have this conversation a lot. What do you look for from a partner looking forward? As well as you think about those three products, can scale in the payins, the payouts, and the on-ramp, and then also potential other use cases that exist. It would be great to kind of unpack that a little bit as well.
Yeah, I mean, I said it earlier, we look for partners who can go on the journey with us. I think Zero Hash has been a great partner from that standpoint. Sort of geo expansion, obviously super important. Payouts is a good example of supporting sort of US merchants right now, and then expanding that out to like supporting EU merchants and eventually supporting global merchants, so you can have both directions, not just global payouts from the US, but also global payouts from other regions. Like that's really important to us. Just keeping up with like the chains and the coins, keeping us informed, as opposed to us having to go out and like find every chain and every exciting opportunity and kind of ask you folks for it. You tend to come back to us and say, we already are offering this. We get these great surprise, we share a Slack channel. Get these great like surprise Slack messages that show up that say, hey, we're onboarding this new chain, we're onboarding this new coin, you can start using it tomorrow. And we have to go through our own, certainly internal compliance checks and legal checks and all of the work that we do. But it just makes it much easier for us. And I think having partners that can kind of front run the things that you are going to do or that you might do really just opens us up internally to explore and to ideate and to kind of think about all of the practical implications without having to add to it. Oh, and we need to go and make sure like our liquidity provider might like support that chain one day, and they'll turn around for us in like 8 to 12 months. So I think like certainly geo, certainly coins, certainly chain availability, and then frankly just keeping costs low. Like gas fees are nothing to shake a stick at. They can be pretty difficult. They can be pretty variable depending on the chain you're operating on. And frankly, especially in like the on-ramp market, it's competitive. You look at most of the on-ramp aggregators today, and they're ordering by price. And if you look at the top 2 or 3 aggregators on there, they're difference in 3-4 cents, but it makes a difference between being above the fold and having consumer preference. And so staying really competitive on that front, you all have been, but remaining competitive on that front, sort of across all dimensions of products that we build, makes a big difference.
You know, absolutely. I think from a gas or from a network fee piece, I think investing in actually the chains are actually doing a lot to try and make it cheaper, right? But you have to invest technologically. For example, if a chain is launching a batching functionality, you then have to go out and build a batching functionality to be able to take advantage of what the chains are hearing, right? So it's really this chain partner all the way upstream to the customer, and it really does require those different pieces to connect together to allow that to happen.
And everyone notices when it gets bad, right? And stablecoins, it's worse, right? So if you buy Ethereum and the gas fee fluctuates,
which it did
you
last
don't
week,
really notice because the Ethereum's probably changed in price significantly since the last time you looked at it anyway. But when you buy $1 in stablecoins and it costs 5 cents, it's right there, right? You tried to pay for something for $1 and you only got 95 cents. So like it's going to become more competitive. It's going to become more important, and we're going to have to look for more ways to abstract and gas prices that we do pay and reduce gas prices that we have to expose to the consumer.
Absolutely, thank you. And then I think you mentioned Base, for example. I think Base is 11 months old. And so if this was this time last year, we wouldn't be talking about it. And I think in 12 months' time, if we're here again, we'll be talking about something else. But also fundamentally, the technology of this also changes, right? Ethereum, you've mentioned a few times, is also fundamentally technically different than what it was a few years ago. This is technology that has been constantly built and iterated on. So it's quite a challenging space because the innovation both of new items but also existing items and innovation within those work streams is so quick and so fast. So I'm going to ask you something that I really don't like doing, which is talking too much about what does the next 12 months look like? What does the future look like? If you were to, if you were to say, what does that look like, especially around stablecoins and the changing mechanism of payments? What does the future look like from your perspective?
I have to be careful. I think as we start to see a more mass adoption of stablecoins, especially within traditional Web 2 merchants, we're going to simultaneously see organizations like Stripe doing everything they can to abstract that complexity away in such a way where the coins and the chains, all really just become kind of their fundamental financial rails. And this can take a lot of different shapes, right? But what you would hope is in the future, in a year, in 5 years, right, when you're checking out somewhere and you're spending your stable coins, you're really not making any decisions as a consumer about what coin or chain you're using based on the downstream preference of the merchant, right? I think this is really important. Whether that means a company like Stripe or with the partnership with Zero Hash is translating all those coins down to something like fiat, right? Or standardizing more towards a singular coin or chain on the back end that can then be used for payouts. I think that in the short term, at least, we're going to see a lot of that kind of abstraction happening. And it's not going to be visible to the consumer. It's going to be much more of a merchant motion, right? It's going to be much more about how do I convince the average merchant not to have to learn all about blockchain to be able to absorb all the value that it's going to bring to them. And so it's a bit of a boring answer. I think it's very much like an infrastructure answer, but I actually think that's like the biggest shift that's going to happen. Because like to John's point at Sessions, right, the technology is there now. Like we have the speed, right? We have stable coins that are actually stable. We have the regulation is getting better. All these pieces are in place. But what's really hardest for kind of the traditional merchants is they just don't want to learn about it. They're running businesses, right? And they're running complex businesses. And the last thing they want to go do is make a bet and say, well, I think we're going to bet on this coin and this chain, and I hope that works out. And I wonder if we switch to this other coin and this other chain, if it would work better. So I really feel like that is kind of the boring, non evangelism kind of view into what's actually going to change kind of the fabric of finance and payment finance, especially for merchant organizations that Stripe works with.
I think that's a fascinating answer, and we sometimes say this space has become successful when the conversation around technology moves to the background versus the foreground for most people, in the same way that unless you're a payments geek, which I know that you guys are, you don't really want to dive into the pieces. So it's really those end users, those merchants, really just making it really easy.
And to be clear, we're payment abstraction geeks.
Yeah.
Right? Like Stripe's entire motion was taking this very complex, old financial world and simplifying it down to an API. And as much as I'd like to think that crypto just does that natively, the like complexity of multi-coin, multi-network still provides great opportunity, right, for companies like us to go and enable those merchants to have the same sort of one API interaction, such that they can benefit from global commerce without having to go and execute global commerce.
Well, I think that's a great way to end it. And thank you, John, for coming in, and thank you, John, for being a great partner. Thank you.
Thanks.
Cheers, John. Thank you.